In this one, we are reading the economics part, and that is for the CFA level 1 curriculum. Economics part, what are the topics which are covered under the economics? That is the understanding business cycle. We need to learn about the understanding business cycle, then the capital flow and the FX market, exchange rate calculations, fiscal policy, international trade, introduction to geopolitics, monetary policy, the firm and the market structure, and the foreign exchange market and the capital flow. So currently we are reading about the monetary policy. We are discussing that particular part. So what is the monetary and fiscal policy? So monetary and fiscal policy क्या है? This topic review covers the supply and demand for money. इस topic में हम particularly क्या पढ़ने वाले हैं? The same as this topic review covers the supply and demand for money as well as the fiscal and monetary policy. So this unit will cover the supply and demand for money as well as the fiscal and the monetary policy, which we have already read somewhere in while in our graduation or maybe any of the professional journey as well. We have already covered the fiscal policy and monetary policy at the C intermediate level as well. So this is a lot of material, but you really need to get it all down to be prepared for the exam. Concentrate initially on all the definition and the basics of expansionary and contractionary fiscal and monetary policy. When you read it the second time, try to understand every cause and effect relationship so you can trace the effects of a policy change through the economy. In this way, you will be able to answer the question about the effect of, for example, the open market purchase of security by the central bank on interest rate, consumption, saving, private investments, and of course the real GDP in the short and the long run. You should understand the role of central bank in a developed economy. What is the role of central bank in a developed economy, including its limitation in achieving its stated objective? So this is the exam focus from exam point of view. What we need to learn at the for the level 1 candidate, what they need to take care. So these are covered by the institute. Now comes the money and inflation. Compare the monetary and fiscal policy. What we need to do is to cover out the compare करना होगा. We need to compare the monetary and the fiscal policy. Fiscal policy refers to a government use of and taxation to influence the economic activity. What is fiscal policy is all about? That is the government use of spending and taxation. When the government will spend the money, when it will taxation to influence taxation. Why government tax so that the government can get the income from the public. So and spending, when the government is spending the money, the fiscal policy is all about the government use, how the government is spending, and taxation to influence the economic activity को influence करने के लिए the government क्या क्या कर रही है. The budget is said to be balanced when the tax revenue equals to the government expenditure. Budget is said to be balanced when we will say that the budget is balanced when the tax revenue equals to the expenditure, government expenditure के equal होगा. We will say that the budget is said to be balanced, and a surplus budget occurs when the government tax revenue exceeds the expenditure. Surplus is when the tax revenue जो है that the same exceeds the expenditure, and a budget deficit occurs when the government expenditure exceeds the tax revenue. So this is so basic terms if we talk about the things. So there is nothing to spend much and more time on this particular part. Now moving further, monetary policy. So we know that what is fiscal policy. जब government खर्चा करती है, use of spending and as well as collect करती है, collect in the form of taxation to influence करे economic activity. What is monetary policy? It refers to the central bank actions that affect the quantity of money and credit in an economy. जो भी whatever the central bank के actions जो कि affect करती है the quantity of money and credit in an economy में, what we all people know that central bank regulate the money supply in the economy. So what is monetary policy is nothing but the central bank's action that affect the quantity of money and credit in an economy in order to influence the economic activity. Monetary policy is said to be expansionary or accommodative or easy. Monetary policy is said to be expansionary, accommodative, or easy when the central bank increase the quantity of money credit in an economy. When we say that the government is following the expansionary policy, when the government, when the central bank increases the when the central bank increase the quantity of money and credit in an economy, then we will say that it is following the expansionary monetary policy. Conversely, Conversely, the central bank is reducing the quantity of money and credit in an economy. The monetary policy is said to be the contractionary or the restrictive or tight. Or when the central bank reduces the quantity of money and credit in an economy, then we will say that this is what the government is following. The central bank following the central bank actions to regulate the economy, the money in the economy is the same, is followed by the contractionary fiscal policy. Both monetary and the fiscal policy are used by policymakers with the goals of maintaining stable prices and producing positive economic growth. Fiscal policy can also be used as a tool for distribution of income as well as wealth. So this is so basic terms we have discussed yet, and that is there is nothing to talk further, or we can say that we need to elaborate. This is the basic terminology we used, while in fiscal policy is nothing but the government use of spending and taxation to influence economic activity, whereas for the fiscal policy is nothing but how the central bank regulate the total money supply, or how the same is regulating the money credit in an economy, how when it is following the expansionary policy, when it want to increase the money supply and the quantity of money in an economy, while it uses the contractionary policy when it want to restrict the same. Now moving further, that is what that talks about describe the function and the definition of money. So this is the basic parts of economics. What are the functions and definition of money? Functions and definition of money क्या है is money is most commonly defined as generally accepted medium of exchange rather than exchanging goods and service directly. Bartering using money facilitate indirect exchange. Money is what? Money is the most commonly defined, which is generally acceptable as a medium of. These are nothing but the characteristics of money, which we can say it is generally acceptable. It is a medium of exchange rather than exchanging goods and service directly. It is not the bartering. Earlier, there was a barter system, while it is what it is. It is generally acceptable using monetary facilitate the indirect exchange. Money has three primary functions. So, there, what are the three primary functions of the money? That the same is the medium of exchange or means of payment, because it is accepted as a payment for goods and services. So what we say for the money has the three primary function. It is what? Money serve as a medium of exchange, as a means of payment, because it is accepted as a payment for goods and service. Money also serve as a unit of account. It is what? It has a standardized unit. Prices of all goods and services are expressed in units of money, dollars, yen, rupee, pesos, and so forth. This allow us to determine that how much of any goods we are foregoing when consuming another. And money provides a store of value, because money received for work or goods now can be saved to purchase goods later. We can defer the amount. We can store the money for our future. Matlab, the same is the characteristics is we can defer it, we can store the same. We can't store the perishable tomato for our future use, or to buy something else in a future, whereas money provide it facilitate for storing our value, because money received for goods for work for goods now it can be saved to purchase goods later. So what are primarily what are the three functions of money? It is act as a medium of exchange, means of payment. Money also serve as a unit of account. It can, because prices of all goods and services are expressed in unit of money, it can be expressed in unit of money, as well as it can act as a store of value. So these are primarily the three functions. Moving further, now what is the narrow money? Narrow money, broad money, and all such things. So what is narrow money? Narrow money is the amount of notes, currency, and coins in the circulation in an economy plus balance in the checkable bank deposit. तो narrow money क्या होता है? Is that narrow money is the amount of notes, currency, and coins. Narrow money is what? It is the amount of notes. What is the amount of notes, currency, and coins in the circulation in an economy, plus the balance in the checkable bank deposit. Broad money includes the narrow money plus any amount available in liquid asset which can be used to make the purchases. So, what is narrow money? Narrow money is the amount of notes. What is narrow money? It is the amount of notes. That is what currency, coins, plus balance. What are the balances kya hai in the checkable bank deposit. Then the broad money includes narrow money. Broad money includes the narrow money. What are covered, already covered by narrow money? That is the currency and notes in the circulation plus the checkable bank deposit. Broad money includes narrow money to आएगी as well as any available amount available in liquid asset which can be used to make purchases. Liquid broad money also includes the any liquid amount जो भी है amount available in liquid asset which can be used to make the purchases. Measures of money differed among monetary authorities, but there is a consistency in that broad measure of money include money that is less liquid, immediately spendable, that included in the narrow money measures. We have included definition of narrow money and broad money aggregate used by the US Federal Reserve and by the European Central Bank as example. तो narrow money क्या है? That the same is the amount of currency and coins in the circulation in an economy plus the balance in a checkable bank deposit. Broad money includes narrow money plus any amount available in liquid asset which can be used to make the purchases. What are the measure of money differed among the monetary authority, but there is a consistency in that broad measure of money include the money that is less liquid, immediately spendable, which can be immediately. Measures of money differ करता है among monetary authority, but there is a consistency in that broad measure of money include the money that is less liquid, immediately spendable, then that included in narrow money measures. We have included the definition of broad and narrow money aggregate used by the US Federal Reserve and by the European Central Bank as example. According to the Federal Reserve Bank of New York, according to what? According to the Federal Reserve Bank of New York, the money supply measures करता है reflect the different degree of liquidity and spendability that different types of money have. The narrowest measure M1 is restricted to most liquid form of money. It consists of currency in the hands of public, traveler checks, demand deposit. तो M1 basically क्या करता है? Demand deposit plus currency and what is the currency in the hands of public कितना है? Travelers checks, demand deposit and other deposit. So it is currency with the public plus demand deposit plus other deposit against which checks can be written. M2 includes M1 plus saving account. M2 में क्या आता है? So what does M1 includes, what does M2 includes and all such thing. So from here we can get more clarity about what is M1, what is M2, what is M3, what is narrow money, what is broad money, which is most liquid, which is least liquid, and all such things. So from here we can come to know about the same. तो M1 is what हम बोल रहे हैं that the same M1 is most liquid. M1 क्या है? That the same is it is the most liquid. It is what? It is most liquid and it covers the currency in circulation plus uh, as well as the overnight deposits is to be covered with M1. So currency in circulation plus demand deposit plus other deposit is covered by what? Overnight deposit. So M1 में क्या था? What does M1 includes? It consists of currency in circulation, as well as the overnight deposit. We can say the demand deposit. M2 में क्या था? M2 includes M1. What does M2 includes? M2 is equals to M1 plus saving account time deposit under this. M2 includes M1. जो M1 में आता है whatever covered by M1 that also includes in M2. तो M1 plus deposit with an agreed maturity of up to 2 years, deposit redeemable at notice of 3 years. It includes the M2 includes the saving account time deposit and balance in retail market mutual fund. एंड M3 क्या आता है? M3 debt security issue within a maturity of up to 2 years. Money market fund share units. These all are covered by M1, M2, and this is the monetary aggregates. The European Central Bank describe their monetary aggregates as M1 is the currency in circulation. What is the currency in circulation? As well as what are the overnight deposit? These are covered by M1. M1 these are covered by M1. What M2 includes? M1 plus the deposit with an agreed maturity of up to, अगर किसी की deposit with an agreed maturity of up to, if it is up to 2 years, that the same is covered by M2, as well as the deposit redeemable at notice of up to 3 months. If the deposit redeemable at notice up to 3 months, that the same is to be covered by M2. And the deposit with an agreed maturity of 2, if the deposit agreed maturity up to 2 years, that the same is to be covered by M2. Whereas M3 cover what all are covered by M3, that the same. So M3 is M1 plus M2 plus the repurchase agreement, the money market fund share units, and the debt security issue within a maturity of up to 2 years. So here the debt security are covered by M3, and earlier the deposit with an agreed maturity of 2 years is covered by M2. So there is a thin line difference between these two. Here the deposit is to be covered, whereas there are debt security issue within a maturity up to 2 years are covered under M3. Explain the money creation process. Now we need to explain that what is the money creation progress process. What is the money creation process? Now we need to understand that, explain the money creation process. What is money creation process? In the early stages of money development, promissory notes were developed. There were promissory notes were developed. When customer deposited gold or other precious metal with early bankers, they were issue a promissory. जब भी वो whenever they deposited the gold or other precious metal with the early bankers, they were issued a promissory note is issued to them, which was promised by the banker to return that gold on demand from the depositor. Whenever the depositor asks for the same, whenever they demand the same, the depositor is who? Depositor. The bank will return this precious metal, and all. Promissory notes themselves then become a medium of exchange. So what we say for promissory note, what happened earlier, that पहले क्या होता था, in earlier times, that promissory notes developed हुए थे, and if you deposit the precious metals or gold to the banker will issue you a promissory note, and whenever you demand the same, the depositor will return the same metals and all. Promissory notes themselves then become a medium of exchange. Bankers recognizing that all the deposit would never be withdrawn at the same time. Bankers recognize that सारे के सारे deposit जो है वो एक साथ withdraw नहीं होंगे. Started lending a portion of deposit to earn interest. This lead what is called, that is a fractional reserve banking. This is to be termed as fractional reserve banking. In a fractional reserve banking system, a bank holds a proportion of deposit in reserve. In most countries, banks are required to hold a minimum percentage of deposit as reserve. So in fractional reserve banking system, a bank hold करता है the portion of deposit in reserve. In most countries, banks are required to hold a minimum percentage of deposit. What you need to do is to hold a minimum percentage of deposit as reserves. When cash is deposited in a bank, the portion that is not required to be held in reserve can be loaned out. Whatever, if the cash is deposited in the bank, the portion that is not required to be held in a reserve, whatever which is not required in the reserve, that can be loaned out. When a bank makes a cash loan and the borrower spends the money, the seller who receives this cash may deposit it in the bank as well. When a bank makes a cash loan and the borrower spends the money, the seller who received this cash may deposit in the bank as well. These funds can now be loaned out by this bank except for the portion that must be held as reserve by each bank. This process of lending, spending, and deposit is a process of lending, spending, depositing can continue until the depositor has some multiple of the original cash amount. Consider a bank that has we have the dollar 1000 in excess reserve. Cash need cash not needed for reserve that it lands. Assume the required reserve ratio is 25%. Ratio matlab out of the $1000 we need to reserve only 25% portion. That is nothing but the if the borrower of the $1000 deposit the cash in a second bank, the second bank will be able to lend it its excess reserve. तो accordingly firstly हमारे पास $1000 थे. we फिर क्या किया हमने 25% हमें रिजर्व में रखा तो नाउ वी हैव दी $750. Now out of the $750 again we have those fund may be deposited in a third bank which can be lent its excess reserve of this. तो अगेन वो प्रोसेस चलेगी $750 में अगेन वी नीड टू रिटेन द 25% पोर्शन एंड वी कैन लैंड इट for the 75%. If this lending and depositing continues, the money supply can expand to that $1000 will become $4000. That is 1 by 0.25 multiplied by 100. So we can say that whatever जो न्यू डिपॉजिट था that is $1000 divide by the reserve requirement that is 0.25. It is making the money four times we can say. So money created, so this is the formula. Money created is new deposit divided by reserve requirement. With 25% of deposit held as reserve, the original deposit can result in total deposit four times as large. We can say the money multiplier is the 4. Here the money multiplier formula will become 1 divided by reserve requirement. Kitna reserve requirement tha? 25% of the portion we need to retain to for the reserve requirement. So 1 divided by reserve requirement, that is 1 by 0.25, it will be 4 times. The money multiplier is 4 times. The $1000 make you the will help you to make money to four times, that is the $4000. If the required reserve percentage is decreased, the money multiplier increases. अगर percentage कम हो जाएगा तो money multiplier increase हो जाएगा. If the अगर percentage required reserve का percentage कम हो जाता है, required reserve का percentage कम हो जाता है, then the money multiplier will increases and the quantity that can be created increases. If the reserve requirement was from reduced to 25% to 10% हो जाता है तो 1 by 0.10, तो it will be the money multiplier would increase from 4 to 10 हो जाएगा. Okay, तो what will be the relationship? तो हम कह सकते हैं there is inverse relationship between the reserve requirement as well as the money multiplier. If the reserve requirement falls, the money multiplier increases. If it is 25%, it generates 4 times money in the economy, while if it's just 10%, it will lead to 10 times in the economy. So there is an inverse relationship between the money multiplier and the reserve requirement. Now comes the relationship of money and the price level. What is the relationship between the money and the price level? Money and the price level में क्या relationships है? Is that the quantity theory of money state that the quantity of money is some proportion of the total spending in an economy and implies the quantity equation of an exchange. जो क्वांटिटी थ्योरी ऑफ मनी स्टेट ये बताती है दैट जो क्वांटिटी ऑफ मनी सम पोर्शन, जो भी क्वांटिटी ऑफ मनी इज द सम पोर्शन ऑफ द टोटल स्पेंडिंग का कुछ पोर्शन इन एन इकोनॉमी एंड एम्प्लाइज द क्वांटिटी इक्वेशन ऑफ एक्सचेंज. नाउ व्हाट इज द क्वांटिटी इक्वेशन ऑफ एक्सचेंज? क्वांटिटी इक्वेशन ऑफ एक्सचेंज क्या है? दैट इज मनी सप्लाई मल्टीप्लाई बाय द वेलोसिटी इज इक्वल्स टू द रियल मल्टीप्लाई द प्राइस मल्टीप्लाई बाय द रियल आउटपुट. So mv is equals to py. mv is equals to py. So this equation is what is the quantity equation? Quantity equation of exchange क्या है? और what is the quantity theory of money state that the quantity of money is some proportion of the quantity. हम क्या बोलते हैं? The quantity theory of money state that the quantity of money is some proportion of the total spending in an economy. That is what? That is the total spending in economy क्या है? And implies the quantity equation of exchange. Money supply multiplied by the velocity will give you the price multiply the real output. mv is equals to py. Price multiplied by real. When you multiply the price by the real output is the total spending. So that the velocity is the average number of times per year each unit of money is used to buy the goods or service. The equation of exchange must hold with the velocity defined in this way. So what we are saying that the price multiplied, when you multiply the price with the real output, when you multiply करोगे आप price को with the real output. What is the real output? Is the total spending, that is your total spending, so that the velocity is the average. Velocity will be what? Velocity will be the average, the number of times per year each unit of money is used. Each unit of money is used to buy the goods or service. The equation of exchange must hold with velocity defined in this way. Monetarists believe that velocity and the real output of the economy. So this equation is nothing but when you multiply the price with the real output, you will get the number of times the money supply. तो velocity बताएगी तो money supply multiply by velocity is equals to real output multiply by price, and MV is equals to PY. Alright. Then the monetarists believe that velocity and the real output of economy changes only slowly. Only slowly. Monetarists believe that the velocity and the real output of the economy change only slowly, assuming that the velocity and the real output remain constant. Any increase in the money supply will lead to proportionate increase in the price level. For example, a 5% increase in the money supply will increase the average price by 5%. If there is 5% increase in the money supply will increase the average price by, अगर 5% increase होता है money supply, the average price will be increased by 5%. For this reason, monetarists argue that the monetary policy can be used to control and regulate the inflation. They believe that the real variable, real GDP, and velocity are not affected by monetary variable. Money supply and prices is referred to as a money neutrality. Now you do need to describe the theories of demand for supply, demand for and supply of money. Now, what we need to describe the theories of what is the demand for and the supply of money. What are the theories of the demand for and supply of money? The amount of wealth that household and firms in an economy choose to hold in the form of money is known as demand for money. There are three reasons for holding money. We have the three reasons for holding the money: for the transaction purpose, for the precautionary, and for the speculative. These are the topics that we have already may I may say that we have already studied this in our 11th standard or 12th or at the foundation level of any other course. So these topics are repetitive. Describe the theory of demand for and supply of money. The amount of wealth that household and firms in an economy choose to hold in a form of money is known as demand for money. So, amount of wealth that the household and the firm in an economy choose to hold in a form of money is known as demand for money. There are three reasons for holding money. What are the three reasons for holding money? Why we hold money? For the transaction demand, money held to meet the need of undertaking transaction. As the level of real GDP increases, the size and the number of transactions will increase, and the demand for money to carry out the transaction increases. What are the precautionary demand? Money held for unforeseen future needs. The transactionary motive के लिए we hold the demand for money. We demand for money for the transaction demand. Money held to meet the need for undertaking transaction. As the level of real GDP increases, money held to meet the need for undertaking transaction. As the level of real GDP increases, the size and number of transactions will increase, and the demand for money to carry out transaction increases. For the precautionary demand, money held for unforeseen future needs. The demand for The demand for money for precautionary reason is higher for large firms. In the aggregate, the total amount of precautionary demand for money increases with the size of economy. For the speculative demand, money that is available to take advantage of investment opportunity that arise in the future. Money that is available to take advantage of investment opportunity that arise in the future. It is inversely related to return available in the market. As bond and other financial instrument provided higher returns, investor would rather invest their money now than hold speculative money balances. Conversely, the demand for money for speculative reason is positively related to perceived risk in other financial instruments. If the risk is perceived to be higher, people choose to hold rather than invest it. The relation है between the short-term interest rates and the quantity of money that firms and household demand to hold is illustrated in the figure. At a lower interest rate, firms and households choose to hold more money at higher interest rate. The opportunity cost of holding money increases, and firms and household will desire to hold less money and more interest-bearing financial assets. So this is the demand and supply for money. This is the x-axis. एक्स एक्सिस में बताया है द क्वांटिटी ऑफ मनी, एक्स एक्सिस को रिप्रेजेंट किया है द क्वांटिटी ऑफ मनी को, और वाई एक्सिस को रिप्रेजेंट किया है विद व्हाट, वाई एक्सिस को रिप्रेजेंट किया है विद द नॉमिनल इंटरेस्ट रेट। तो एक्स एक्सिस को रिप्रेजेंट किया है विद द क्वांटिटी ऑफ मनी से, वाई एक्सिस को रिप्रेजेंट किया है नॉमिनल इंटरेस्ट रेट से। दिस इज द लाइन दैट इज द मनी सप्लाई, ये है नॉमिनल इंटरेस्ट रेट, दिस इज द मनी सप्लाई, एंड दिस इज द लाइन इज द मनी डिमांड। मनी डिमांड ये क्या है, नेगेटिवली स्लोप हम बोल सकते हैं मनी डिमांड एट देयर इज एक्सेस डिमांड फॉर मनी लीडिंग टू सेल्स ऑफ सिक्योरिटी। दिस इज डिमांड, दिस इज मनी सप्लाई इज अ कांस्टेंट बता रखा है। देयर इज एक्सेस सप्लाई ऑफ मनी लीडिंग टू परचेज ऑफ सिक्योरिटी। अगर अगर एक्सेस डिमांड हो गई मनी की तो इट विल बी लीडिंग टू सेल्स ऑफ सिक्योरिटी, और एक्सेस सप्लाई ऑफ मनी लीडिंग टू, if there is excess demand for money, if there is excess demand for money, that will be leading to sales of the security. We need to sell the security, or if there is excess supply of money leading to purchase, either we need to sell or purchase. The supply of money is determined by the central bank, the Fed in the United States, and is independent of the interest rate. This account for the vertical perfectly inelastic supply curve. This is what perfectly inelastic supply curve है. The supply of money is determined by the central bank, the Fed in the United States, and is independent of interest rate. This account for the vertical perfectly inelastic supply curve in this figure. The short-term interest rate are determined by the equilibrium between the money supply and the money demand. As illustrated in this figure, the interest rate is above the equilibrium rate. Interest rate is above the equilibrium rate. इसको हम भी ड्रॉ कर सकते हैं। How can we draw the same? Is the supply and demand for money. So there is a straight line. This is a straight, but this maybe not seems straight. What is this? This is हमारा क्वांटिटी ऑफ मनी. This is the money supply. ये है हमारा मनी डिमांड. This is our nominal interest rate. गर्वित को पूरा कॉल करेंगे. This is nominal interest rate. Now इस जगह हमारी एक्सेस सप्लाई ऑफ मनी लीडिंग टू परचेज ऑफ सिक्योरिटी. यहाँ पे हमारी मनी सप्लाई ज़्यादा है, हमें सिक्योरिटी को सेल करना पड़ेगा. यहाँ पे हमें परचेज करना पड़ेगा. बहुत ज़्यादा मनी सप्लाई तो वी विल परचेज द सिक्योरिटी. यहाँ पे हमारी यहाँ हमारी इस एरिया में इस जगह पर्टिकुलर हमारी डिमांड ज़्यादा है देन सप्लाई. डिमांड ज़्यादा है तो वी विल सेल द सिक्योरिटी. इस पर्टिकुलर पोर्शन में हमारी सप्लाई ज़्यादा है, डिमांड कम है. यहाँ हमारी डिमांड ज़्यादा है तो वी विल सेल कर देंगे सिक्योरिटी को. यहाँ हमारी सप्लाई ज़्यादा है तो हम परचेज कर लेंगे द सिक्योरिटी को. The supply of money is determined by the central bank, the Fed in the United States, and is independent of the interest rate. This accounts for the vertical, perfectly inelastic supply curve. Short-term interest rates are determined by the equilibrium between the money supply and money demand. If the interest rate is above the equilibrium rate, there is high excess supply of real money. Firms and households are holding more real money balance than they desire to give the opportunity cost of holding money balance. They will purchase the security to reduce their interest rates are below equilibrium. There is excess demand for real money balance as illustrated in this figure. Firms and households will sell security to increase their money holdings to the desired level, decreasing security price and increasing the interest rate. A central bank can affect the short-term interest rate by increasing or decreasing the money supply. An increase in a money supply, जैसे ही money supply हमारी increase हो जाएगी, तो there will be shift of the money supply curve to the right, will put downward pressure on interest rate. With an increase in a money supply, there is excess supply of money at the previous rate of 5% to reduce their money holding. Firms and households by security increasing security prices and decreasing the interest rate until the equilibrium interest rate 4% is. If the central bank decrease the money supply, excess demand for money. So this is the way कैसे हम regulate करें the same. Then comes this graph. increase in money supply. Earlier it was the money, the supply for demand money, which is again the quantity of money, the demand of money, the money supply. यहाँ पे हमारी increase हो रही है supply में, तो यहाँ पे supply जो है यहाँ से यहाँ जा रही है. The Fisher fact states the nominal interest rate is simply the sum of real interest rate and the expected inflation. Nominal interest rate, real interest rate, expected inflation. The idea behind the Fisher effect is that real rates are relatively stable and changes in interest rate are driven by changes in expected inflation. This is consistent with money neutrality. This is what? This is consistent with money neutrality. So what is money neutrality is basically the idea behind the Fisher effect is that real rates are relatively stable. हम क्या बोलते हैं, जो idea है behind the Fisher effect is that real rates are relatively stable and changes in interest rate are driven by changes in expected inflation. This is consistent with money neutrality. Investors are exposed to the risk that inflation and other future outcomes may be different than expected. Investors require the additional written risk premium for bearing this risk, which we can consider the third component of nominal interest rate. Nominal interest rate is equals to real interest rate प्लस हमारा expected inflation क्या है, प्लस हमारा जो risk premium क्या है for uncertainty. Risk premium, what is our risk premium for uncertainty? Expected inflation versus unexpected inflation. Now we need to discuss further. But before discussing that, we are jumping towards the question. One paper we still need to read, but we will discuss it subsequently. Firstly, we are going to discuss the MCQs, we may say. Both monetary and fiscal policy are used to. Monetary as well as fiscal policy use की जाती है for balance the budget, for achieve government economic targets or redistribute the income or wealth. तो I may say both of the policy हम इकोनॉमी को रेगुलेट करने के लिए ही कर रहे हैं. फिस्कल पॉलिसी में गवर्नमेंट क्या करती है, बेसिकली स्पेंड करती है, टैक्सेशन लगाती है टू रेगुलेट द इकोनॉमी. मॉनेटरी पॉलिसी में मनी का रेगुलेशन होता है इन द कंट्री. द आंसर विल बी व्हाट? The answer will be to achieve the economic targets. दोनों पॉलिसी का मेन पर्पस क्या होता है? The aim of both the policy is what? Is to achieve the economic targets. So both the monetary and the fiscal policy primarily strive to achieve the economic targets such as inflation and the GDP growth. Balancing the budget is not a goal for monetary policy's potential outcome of fiscal policy. Fiscal policy but not monetary policy may secondly be used as a tool to redistribute the income and wealth. तो द हमसे क्या पूछा? बोथ these are used. Fiscal policy but not monetary policy. Okay, so the answer is the achieve economic targets. Which of the following statement is least accurate? The existence and the use of money. इनमें से least accurate क्या है? Permits individual to perform economic transaction, require the central bank to control the supply of currency and increase the efficiency of transaction compared to the barter system. Which of the following statement is least accurate? कौन सी है? The existence and the use of money permits individual to perform economic, requires the central bank to control, increases the efficiency of transaction compared to the barter. So the answer will be, the answer is money function करती है. It requires the central bank to control the supply of currency. The answer is B. The answer is what? The answer is B. We may say that the answer is B. It requires the central bank to control the supply of currency. Which of the following statement is least accurate? सबसे कम सही कौन सा था? It requires the central bank to control the supply of currency. The answer is the B. Because money function as unit of account, as a medium of exchange, and as store of money existed long before the idea of central bank was conceived. So the least accurate is requires the central bank to control the supply of money. In money neutrality holds, the effect of an increase in the money supply is, money neutrality में क्या है? The same is higher prices. So the answer is A, that is higher prices. If money neutrality holds, the effect of increase in the money supply is higher. अगर money neutrality hold करती है, तो the effect of increase in the money supply is the higher prices. If the money supply is increasing and the velocity is decreasing, money supply बढ़ रही है, velocity कम हो रही है. money supply बढ़ रही है, velocity कम हो रही है, तो it will be the impact on prices and the real GDP is uncertain. In that particular case, the impact on the prices and the real GDP will be uncertain. If the money supply is increasing and the velocity is decreasing, if the money supply is increasing, the velocity is decreasing, then what will be happen? Then the effect will be the money supply. The same is given equation of exchange is MB is equals to P, where an increase in the money supply is consistent with an increase in nominal GDP. However, a decrease in velocity is consistent with a decrease in nominal GDP. Unless we know the size of changes in the two variables, there is no way to tell what the net impact on the real GDP and the prices. So it will be the impact on the price and the real GDP is, so the impact on the prices and the real GDP will be uncertain. The money supply curve is perfectly inelastic because the money supply curve है that is perfectly inelastic. So money supply curve है that is perfectly inelastic because the money, because what? Because the supply is independent of interest, because the supply, because of what? Because of the supply is independent है of the interest rate. We have read the graph as well for the same, that because the money supply is independent here of the interest rate. The Fisher effect states that the nominal interest rate is equals to, nominal interest rate किसके equal होगा? To the real rate plus expected inflation, that will be equal to the expected inflation. A central bank policy goal least likely include, central bank का जो गोल है लीस्ट लाइकली क्या इंक्लूड नहीं करते हैं? द सेंट्रल बैंक, तो दैट इज द मिनिमाइजिंग लॉन्ग term interest rate. That is what? That is minimizing long term interest. The central bank policy goals least likely include, that is a minimizing long term interest rate. A country that targets a stable exchange rate when another country is least likely must also match the money supply growth rate of other country, must also match the money supply growth rate of the other country. So these are basically the MCQ. अगर हम फिर से रिकैप करने की कोशिश करें फ्रॉम द बिगनिंग, तो फर्स्ट वन, बहुत मॉनेटरी एंड फिजिकल पॉलिसी यूज की जाती है टू अचीव इकोनॉमिक टारगेट्स. दिस इज वेरी क्लियर टू अस. विच ऑफ द फॉलोइंग स्टेटमेंट इज लीस्ट एक्यूरेट? इट रिक्वायर्स द सेंट्रल बैंक टू कंट्रोल द सप्लाई ऑफ करेंसी. अर्लियर पहले से ही चलता आ रहा है, ये तो लीस्ट एक्यूरेट है. ये एग्जिस्टेंस एंड यूज ऑफ मनीज अर्लियर बिफोर द सेंट्रल बैंक कंसीव हुआ, उससे पहले तो रिक्वायर्स द सेंट्रल बैंक टू कंट्रोल द सप्लाई ऑफ करेंसी. दिस इज लीस्ट एक्यूरेट. If the money neutrality holds, the effect of increase in the money supply is higher prices. अगर money neutrality hold करता है तो जो भी effect होगा of an increase in the money supply will be the higher prices. अगर money supply increase हो रहा है और velocity decrease हो रही है तो the impact on prices and the real GDP will be uncertain. अगर money supply increase हो रहा है and velocity decrease हो रही है तो the impact on the prices and real GDP will be uncertain. The money supply curve is perfectly inelastic because जो supply है is independent है of interest rate पे, independent है, that is not dependent. That we have discussed the graph as well, that the money supply is independent of the interest rate. Then comes the Fisher effect, state that the nominal interest rate is equals to the expected inflation. Then comes the central bank policy goals least likely to include, वो नहीं include करती है. क्या include नहीं करती है? The same does not include the minimizing the long-term interest rate, minimizing long-term, and the country target to stable the exchange rate with another economic currency must also match the which is least which is least likely the must also match the money supply growth rate of the other country. इसमें हमने एक पेज रीड नहीं किया था, उसके बाद मॉनेटरी पॉलिसी हमारा फर्दर आ जाएगा. दिस पेज हमें ये पढ़ना है तो अब हम इसको फर्दर कभी डिस्कस करेंगे. दैट्स सेम. This we skipped. This we need to read as well. All right.